We learned last week that inflation is rising at the fastest rate in nearly 4 decades. We go now to Mohamed El-Erian, Chief Economic Advisor for Allianz, a financial services company, and he joins us this morning from Philadelphia. Good to have you here.
Thanks for having me.
The White House says that this number we just got, the 6.8% inflation figure, is backward looking because gas prices are coming down right now. Do you think that we've actually passed peak inflation?
So it is a backward-looking number. I don't think we have passed peak inflation, and that's despite all the efforts that the White House is putting in to limit inflation. I think we're going to see inflation stay around that level for a while.
How long?
A few months. You know, we're seeing a very interesting transition. The original driver of inflation, supply disruptions, labor shortages, the driver is still there but less powerful. But the driver has planted all these other seeds for other sorts of inflation. And that's not a problem because of what the White House is or is not doing. This is a problem because of what the Federal Reserve is failing to do.
Well, the Federal Reserve Chair, Jay Powell, has said he will retire that word transitory. It sounds like you are saying that word should not be used at all, period.
Yeah, I've been saying this for months. The characterization of inflation as transitory is probably the worst inflation call in the history of the Federal Reserve. And it results in a high probability of a policy mistake. So the Fed must quickly, starting this week, regain control of the inflation narrative and regain its own credibility. Otherwise, it will become a driver of higher inflationary expectation that feed onto themselves.
That's an incredible thing to say, not just about the Fed chair, but the Treasury Secretary is a former Fed chair herself. Why do you think that they are both fundamentally wrong?
Well, I think the numbers have proven that transitory inflation was a mischaracterization. The Fed never expected inflation to be at 6.8%. If you look at all the projections they made this year, they were way below this. So they fundamentally misanalyzed the inflation. Now, that's not a problem if they catch up now. If they're honest about their mistake and take steps now, they can still regain control of it.
So the Fed has a meeting this coming week. As you know, they've been undertaking these emergency programs because of the pandemic, buying something like $100 billion in bonds each month. Are you saying they need to hit the brakes hard right now in order to get control?
No, I'm saying that in order to avoid hitting the brakes hard, because if you've hit the brake hard in a few months, there's a risk you send this economy into recession. And it would be unnecessary harm to livelihoods. What they need to do now, Margaret, is ease their foot off the accelerator. There is no reason why they should be injecting so much liquidity. There is no reason why they should be boosting the housing market at a time when house prices are pricing Americans out of buying homes. They should ease their foot off the accelerator in order to avoid slamming on the brakes later on.
And raising rates, when do we talk about that?
Oh, we should be starting to talk about that now. There is the possibility that they may have to raise rates. Look, it's important to stop inflation being embedded into the system because two things happen when inflation gets embedded. One, you lose purchasing power and the poor suffer the most. Second, you get a Fed overreaction and then you get a recession and then you get income losses. So you really want to navigate this process in a timely and orderly way.